Well, Palm, the maker of the pre-phone, says sales this year will be well below its forecast of $1.6 billion. The company says revenues for its fiscal third quarter will be $310 million at the most. That's well below the $409.3 million analysts estimated. Ilya Grozovsky is a top-rated analyst with Morgan Joseph. He joins us now to discuss his assessment of the company. Ilya, welcome to Bloomberg News. Thanks for coming in.
Thanks for having me.
You've been consistently skeptical of management's prior projections. Why?
Well, actually, when they unveiled the phone at CES in 2009, we were actually very excited, and we upgraded Palm from hold to buy with a $10 price target. Subsequently, when it achieved our price target, we downgraded it to a hold. It continued to go higher. We actually then implemented a sell rating on it, again with a $10 price target, and that's sort of our history with Palm. We had been skeptical about the second half and the guidance that management put out of $1.6 to $1.8 billion. We just felt that the assumptions that they had to make with their new customer Verizon would have been so overly aggressive that they would have had to have penetrated approximately 1% of the Verizon customer base in the first 3 months of their rollout at Verizon, which began January 25th.
Ilya, talk to me about their viability to remain independent. Are they too small to compete?
The landscape has changed dramatically over the past 12 months in the smartphone space. When they rolled out the Palm Pre, it was really a game where they were the third player with iPhone and with BlackBerry. Subsequently, with the Google phones, the Android phone, the Droid phone from Motorola, HTC, these are all resurgent brands. They will have a much more difficult time.
And Ilya, what are we looking at here? Palm versus competitors. We're taking a look at that one-year chart, and you can see exactly what you're talking about. Look at Apple on the rise there.
Right. So exactly. Palm had done a very big offering in the over the last quarter or so, where they raised about $400 million. Their guidance at the time was for the upcoming quarter was negative. Their quarterly report last quarter was negative, but they had given this very bullish guidance, and that's really what bolstered the stock and sent it to levels about $17, where they were able to get the deal done at a very high level. Any
concerns about their cash position or their balance sheet?
They have about $500 million in cash right now. They're obviously burning. Last quarter, they burnt about $70 million. They had been bringing that down. They had been burning well over $100 million. My assumption is that they're going to bring down the cash burn. They're going to take another swing at this, I believe, over the next couple of quarters.
How do they bring that cash burn down?
They're going to bring the cash burn down by cutting expenses, obviously, and also trying to wring the costs out of the product.
Talk to me about what they might need to do to recover.
Well, they have enough cash to take another swing or two swings at the new product and try to once again reinvent themselves as they did last year in January.
Which is not, and we should point out, not an easy task, right? Especially in this economic climate.
No, not an easy task at all. Those smartphones as a segment are growing tremendously, 40% growth, and really the hottest space within the overall cell phone market. Nevertheless, competing with Apple and with, to a certain extent, BlackBerry, it's very difficult, and Google has made it even more difficult for them.
But 40% growth is nothing to sneeze at, right? That's significant.
That's for the overall space. They obviously are seeing declines relative to what they had been selling over the previous years. So
is this competition now joined? Is it like the contest of the fittest here? How would you assess that?
Well, I think that what customers are looking for when they buy smartphones are applications, and Google has applications about 10,000. iPhone has about 100,000 applications, and the Palm doesn't have even close to that. They have about 1,000 applications. It's very difficult for a customer walking into a Verizon store or a Sprint store to decide, I want to buy a Palm phone when they have competing products like iPhone, not in Verizon, obviously, but AT&T.
Well, you mentioned the word buy. Would it make sense to try to find a buyer at this point?
There have always been rumors over the past year of a buyer. Microsoft had been one, Dell, HP. There's lots of players, Nokia, who want to be in the smartphone space and have more of a presence. But with them selling 500 units or so in a quarter, that's really not going to move the needle for anybody who wants to really get into the smartphone space in a meaningful way. I view that as very skeptical.
Is the space just now so crowded, so closed? You can't see anybody else trying to get into this space right now, can you?
Dell is trying to get into the space a little bit in Asia. They just rolled out a smartphone.
But I mean that because it's such a high mountain to climb. As you mentioned, if you look at the apps that the other guys have, it's where do you start?
It's very difficult. It's a chicken and an egg. If you don't have the apps, nobody wants to buy your phone. And if nobody wants to buy your phone, the people who design the apps don't want to actually design apps for your phone because it's a waste of their time. They're not going to make money on it. Not enough units.
What are we looking at for Palm going forward? How's 2010 going to shake out for them?
Well, so we had been the low estimate on the street at about 1.3 billion in revenues. Their guidance had been 1.6 to 1.8. We're now going to be at around 1.2 billion in revenues for this year, and we think that the more meaningful year is 2011, where we think it's going to drop below 2010. We're looking at about 700 million in revenues that year. So
might I say, if you're the little guy, I hate to make the analogy like you're the one getting sand kicked in your face, but if you're the little guy, is there still room to hope, at least in terms of, well, you know, there's always ever-expanding technology?
Look, with $500 million in cash, they can play in this game in the sandbox for quite some time.
Absolutely.
I don't think they make any real inroads. They're just playing with big boys who have a much better product, much better applications, and much more marketing. So they can play, but I don't think they make any inroads.
Ilya Grozovsky of Morgan Joseph talking to us about Palm and the Ilya, very nice to meet you. Thank you so much for coming in. We appreciate it.